Okay, back with the other half of the Hard Rock Analyst team, David Coffin. David, I want to say, is the technical guy. David is a geologist by education, by experience, et cetera, He is the person who actually does the technical due diligence on all of the companies that you follow in the Hard Rock Analyst.
Yep.
Criteria, what do you look for?
Basically we work within this premise as a newsletter, which is that we're looking for companies with the potential to double over the next 12 months. We're obviously looking for more than that because these are highly speculative companies for the most part that we talk about. So what I'm looking for is a premise, typically, depending on the stage of the company, from early on, a company with a 2 million ounce target, and the people who can actualize that. In other words, the people who can recognize how to do the work that demonstrates that and who can find the funding to make sure the work gets done on an orderly basis.
Back into this for a second, Dave. Now, you said you have a criteria of a minimum asset of 2 million ounces, 43-101. Is that correct?
Typically. There are certainly circumstances where a company working with a smaller deposit, with a smaller market cap, in an area where the infrastructure is going to be in aid, we're going to be quite interested. And I'm saying gold, but the reality is we deal with anything that can be mined. We're very strong on copper. We like iron ore, which is probably the first time since I started in the business 35 years ago that I might have been able to say that.
You know, it's interesting. We did an interview earlier with a fellow who is involved, I guess I should say. I'm not sure if anybody works for this group, KC Research, but Marin Katusa. Marin and I were having coffee before we started filming. He is very, very bullish right now on iron ore.
Yeah, we're quite bullish on iron ore. It's as economies go through industrialized growth, they run through a series of phases, and important to both the first and second phases is iron. The reason that iron ore hasn't been a large focus for smaller companies in the mining sector until recently is there was enough on the ground. It had been established. The big movement over the last 30 years has actually been a shift of steel mills to China, or to Asia rather, Japan and then Korea, and more recently to China, which is to feed local growth. They had ensured long-term supplies of iron ore and of coking coal to go with it, all of the things needed in the process, by funding that, the Japanese specifically, about 30 years ago. Those supplies have been used up.
Yeah, they have been. A lot of supplies in terms of base metals, as your brother and I were talking about just prior to our conversation here. A lot of the base metal supplies, I don't want to say they're being used up, but people are starting to realize that with the increased demand, supply is really becoming a major issue. I mean, you know, and that's evidenced right now by the copper market. We've got copper at almost record high prices right now.
It's pretty close to a record. It's certainly the only higher prices were before the debt crunch. And the reason for that, again, is that there's a slight difference between copper and some of the other metals. With copper, which is a very old metal, historically, that is, the humanity's been using it for almost 10,000 years. The way to generate copper at scale was recognized when electricity became important 120 years ago. Large bulk tonnage deposits came into play, but the best of those have been used up. That's what's happened with copper. And these are deposits that cost billions of dollars to put into production and take 5 or 6 years to do. That's what's important to the copper market right now. It's very tough to put enough of these into production to meet the growth demands in China, and India is coming on fast after that.
Yeah, India, China, the rest of it. It really is amazing. You know, when people say we're in a secular bull market for resources, I mean, I don't think there's any question whatsoever about that. I mean, all the pieces are in place. David, you mentioned two things that you look at. You mentioned, number one, the size of the asset, okay, and number two, you mentioned the people. There's got to be a couple of other things that you consider also.
Well, functionally, we're looking at the market for the various metals and trying to decide whether there's a place. And as importantly, because we're talking about venture capital companies after all, whether there is going to be an interest in what it is they're offering. Some of the smaller market metals, which can do very well for the companies and for the shareholders of those companies, tend to have relatively short time spans when the market's truly interested. If you're in ahead of that, you'll do very well. Once it's underway, we tend to leave it alone. Not entirely, but we do tend to leave that alone. So that's important. When you look at a metal like copper or like gold or iron ore, now that we're into a new stock building cycle for it, those are very large markets, and they're simply not the same level of concern as to whether you're in or out of favor with the metal. It's simply a demand-supply equation that comes into play with them.
Pretty simple industry when you look at basics like that. I want to make one very, very strong suggestion here. You've heard what Eric has to say, obviously heard what David has to say. I really, really recommend that you take a look at the Hard Rock Analyst. It's an excellent newsletter. These guys are real professionals. What a great place to get what I would call arm's length information. David. You get old, you forget things. David, thank you so much.
My pleasure, Al.
I'm not